Good afternoon. This is Sean Golding with Golding & Golding, here to discuss the basics of that thorn in your side, the FBAR. What is the purpose of it anyway? Okay. Obviously, the purpose is going to be different depending on who you ask. If you ask people who have to file it, they just think it's a total intrusion of their privacy. They would be correct from a U.S. person standpoint. From an IRS government standpoint, it's to make sure that the money's not being funneled for illicit purposes, terrorism, money laundering, etc. And they would be correct too. Now, whether filing the FBAR is an infringement of your privacy, that's up for debate. We here think it probably is, but let's just go through what the purpose is from the IRS's perspective. FBAR, foreign bank and financial account reporting, not just bank accounts. That's why they also throw a financial account in the mix. It includes bank accounts, investment accounts, pooled fund accounts, stock accounts, foreign pension plans, life insurance policies that have a cash surrender value. The form is not even an IRS form, right? It's a FinCEN Form, Financial Crimes Enforcement Network. 99.9% of the time, it has nothing to do with anything criminal. The IRS has been assessing and enforcing penalties for about 20 years. I think it was 2003 when that began. Since around 2013, the form's turned electronic. It's due April 15th, but it's on what's called automatic extension right now to October, which means you don't have to file something like a 4868 or 7004 in order to extend it. It's currently automatic. One thing I like to tell people is that they but it doesn't have to be automatic. The IRS could change it and not tell you. So come around February, March of each year, taxpayers should check, and just to be sure, it's still an automatic extension. So from the IRS's perspective, let's say, okay, they say the purpose of the FBAR is to promote transparency. They want to know where the money is. They want to know which U.S. persons have foreign accounts and foreign assets that are reportable as financial accounts. They want to be able to track the money and avoid potential kind of tax crimes, illicit purposes, money laundering, etc., etc. Let's go through a couple of reasons why the IRS is saying, hey, the purpose of the FBAR is really to ensure everyone pays their fair due. They could track the money and make sure it's not being used for tax crimes, let's say. First is the idea of estate tax, right? Estate value. So currently the gift and estate tax exclusion is the lifetime exclusion is like $12 million, right? It's not always that high. But let's take an example. So Joe is a U.S. person. Joe's relatives are non-resident aliens overseas. That's the technical term. They live outside of the U.S. and all of their assets are foreign, nothing to do with the U.S., no U.S. citus. Okay, that can complicate the example. So just imagine Joe's got these relatives overseas and they have no U.S. assets. The relatives pass away and they leave Joe like $20 million because he's their favorite grandson, right? Well, now when Joe passes, he could potentially have an estate tax implication depending on what the value of his estate is. When you're a U.S. person, the estate value is based on your worldwide assets, right? And there are some exceptions and exclusions, domicile, things like that. But for the most part, if someone's a U.S. person, it's their worldwide estate. So if the U.S. doesn't have Joe reporting these foreign accounts, then when Joe passes, how is the IRS going to know? Good for Joe, bad for the IRS, right? Because that's a significant amount of estate tax they may be missing out on. Underreporting of foreign income. So in a lot of foreign countries, passive income, dividends, capital gains, interest is not taxable. So someone could be a U.S. person, even expanding on that example, right? Joe's got, he's making what, like a grip, like a $500,000 a year in interest income and dividends and capital gains and all that good stuff. If that foreign financial institution, maybe they're not reporting for FATCA, the U.S. is going to have no idea that Joe is supposed to be filing. Let me take that back. They're not going to have any idea that Joe should be filing and reporting this money because the foreign institution hasn't reported it. The IRS doesn't know it exists. It's not as if Joe's paying any tax overseas, so there's no foreign tax credits. And so by having Joe requiring him to report, the IRS sees he's got $20 million overseas. If his tax return's not reflecting any passive income, then it could lead to them thinking that Joe might be underreporting. And of course, it reduces the chances of money laundering and structuring and smurfing and all those other types of tax crimes because, quite frankly, when someone has to report all of their foreign accounts, bank accounts, and financial accounts, it makes it more difficult to move money in and out if those values are shifting greatly throughout the year. If you're out of compliance, you didn't know about the FBAR, Before filing the current year and getting yourself into a quiet disclosure situation, there is various what's called amnesty programs taxpayers use to safely get into compliance. If someone's willful or they just can't certify under penalty of perjury that they're non-willful, they would file under the voluntary disclosure program, VDP. That's for domestic and offshore. Otherwise, if someone's non-willful, there's many more options available to them. There are the streamlined filing compliance procedures, there's delinquency procedures, and there's reasonable cause. At Golding & Golding, we have a ton of free information available on our main websites and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.